welcome to Wealth Unleashed webinar, our weekend dose on your journey to wealthy place of financial freedom. So it's such a joy to have you all on this particular call. And we've been looking at a very, very powerful series, and we've touched on the three critical phases we need to master in order for us to achieve financial freedom. The first we mentioned is personal transformation, and we dedicated over 12 weeks, on really achieving financial personal transformation. And you will never graduate. The higher you really need to rise, the more superior your beliefs need to get, the deeper your roots need to go, and the higher your evolution. And that's pretty much what we've been looking at. And so I want to sincerely recommend, if you miss out on that first phase, we dedicated a pretty amount of time looking at personal transformation. It's going to be of tremendous value to you if you have not already, or if you've not been part. Even if you were part, I'd still recommend you go watch the replays. The second phase is on income generation planning and application, and that's the phase we are in right now. And it's really important that we recognize that if you are not making money, you can't manage or multiply money. So making money is so critical in your journey. I often say personal transformation is the foundation for wealth creation, but income generation, planning and application is the pillar of financial freedom, is the pillar for wealth creation. And so it's so important that you pay serious attention. And we've looked at some critical thoughts in this respect. The third phase, which will be the final leg in this series, will be asset accumulation, planning, asset accumulation, optimization, and retention. So don't worry about that. We'll get to that in a bit. And over the past few weeks also, we've been looking at series of insights, strategies that can help you to not only make money, but also preserve and even multiply the money. Okay, so that's what we've been looking at. And so today, we will take it a step further. We started looking at the culture of savings. And if you were part of this session last week, Friday, can you type 1? Just type 1 if you were part of this session when we looked at why people don't save, why people find it difficult to save. You can type 1. And of course, when we started this series, we started to look at why you need to save. And so, excellent. So let's just proceed today. And today we want to look at how to save. Part of the reasons people don't save is because they don't really know how to save. So today I want to narrow in on how to save. And I'm so certain that it's going to be very, very powerful. Now, if you do not yet have my book, Financial Freedom Master Guide, you want to get a copy for yourself. If you live or work in Nigeria, this is a copy you can place order for. Just call the number 0708 797 0441. All right. If you live or work outside of Nigeria, we have the Amazon version, which is available on Amazon. So you can go on Amazon and place order. Okay. How to save. How to save. The first step you need to take in order to save is purpose in your mind to save. Make a decision to save. Make a decision. It's as simple as purpose in your mind to save. One of the steps you can take is to go and open a separate account. There will be no ATM to that account. There will be no online banking to that, online access to that account. Purpose in your mind to save. That is the first point of call. Make a decision to save. All right. Make up your mind to save. And that's where it starts from. So whether as a person, as a family, or as a corporate organization, have a dedicated account for this purpose. And it's part of your decision, right? The year is still very, very young. And this is one of those steps you will need to take. You see, many of us may not realize this, but a lot of us have income pass through our account, but we can't even boast of any measure of liquidity by the time the year is over. We've literally spent it all. And many of us even don't realize also that we are multi-millionaires by virtue of the income and resources that have passed through our respective accounts. But if you don't make it a point of duty, like I've shared, to always, a part of what you earn is yours to make sure that your covenant obligation is taken care of. The next important thing is your savings and investments, right? And then before anything else, I've shared this time and again. The reason why the rich keeps getting richer is simply because they invest first and spend whatever is left. The reason why the poor keeps getting poorer is simply because they spend first and invest whatever is left, if there is anything at all. And more often than not, there is nothing, absolutely nothing left at all. Listen to me. If you lose the amount of money you save, nothing will still go wrong in your life. That's exactly what will happen if you deliberately and make up your mind to start putting that money aside. And you tell yourself that does not belong to you. That doesn't belong to you. I was having a conversation with some friends of mine, and I was asking them, okay, so how far with this structure that we created for this? And how far have we gone? The guy said, it's only on paper. I said, why have we not done this? And they said, it's because of the other pressure points, all the things. There will always be pressure. There will always be something calling for your funds. There will always be something saying, if you don't do me now, you will die, you will fail, you will faint. You have to make up your mind. This is so important. And then one thing I used to liberate that particular friend was, now listen, I asked them, now, do you do this? They said, yes. Why has this pressure not affected this? They said, because it's important. Yes, that's exactly the way you now need to begin to treat your savings. Imagine that the savings was taken away before you even received the income. Would anything have gone wrong? They said, no. I said, that's exactly what you will do. And they implemented this within weeks. And I can tell you this categorically, this thing works. Within weeks, they accumulated so much resources that they never even imagined. I was listening to a very great man share how that when the organization began, it's a non-governmental organization. When they started out, they never had enough to meet all their obligations. It was always a tug of war. And this great man said one day he ran into insight on these principles of savings and decided that forthwith they would only run their organization on 30% of whatever comes in. The remaining 70% should be gathered aside, should be set apart. That they began to implement it at a ruthless, they began to practice that ruthlessly. There was no explanation to why you would not save up 70%. Now listen to me carefully. He said, before then, every new month, there was not always enough to cover the bills. He said, but the moment they made that adjustment, right, they had so much in reserve, and they were always, the reason why that happens is because money doesn't go to those who need it, it goes to those who multiply it. So money itself is very selective. So the more you have, the more you attract. So liquidity positions you, puts you in a place where you are able to even access more opportunities. And it elevates your emotional energy to a positive level where, a lot of us, when you think about yourself right now, and you can't think of where there's money, investment, anything, it has a way it affects even your self-esteem. It has a way it affects your emotional energy. So that thought and feeling of scarcity, of lack and hardship is further reinforced by lack of this practice of savings. And this is the more reason we need to make up our minds, right? Make up your mind. Listen, if you need to eat once a day just so that you can begin to save, if you need to start to trek some distance and then cover the rest with transport just so that you can save, make it a point of duty. The year is still relatively fresh. let's make it a point of duty. Listen, I want to see you, move to the next level in your finances. I want you to be able to harness opportunities that can create massive wealth for you. So propose to save. That's how to say, propose to save. Make up your mind. Number 2, plan what to save. Plan what to save. Okay? I've shared the story time and again. Years ago, I had the opportunity to share platform with some very powerful guys. And after I was done with my session, a young lady asked a question and said that she was earning 15,000 naira, right? She was earning 15,000 naira a month. And that based on the teachings I gave, she was now going to begin to save up 50% of that amount of money. And so I gave her some recommendations. The following recommendations were the things I shared with her. Number 1, I told her that whatever amount she was earning at the time was a reflection of who she had become, and that she would never earn more than that if she doesn't upskill, if she doesn't acquire new knowledge. And she needed to become a superior version of herself and all of that. And then by so doing so, she needed to prioritize investment in her personal development, investment in skill acquisition, and all of that. I said, because nobody would pay her more than that 15,000. If by any means she earned more than that, it will be just out of pity, out of compassion, out of care, not based on skill. And I've shared that time and again with a lot of people. Listen, the highest income you have ever earned is a reflection of how much capacity you possess. The highest income. So if you ever got a job and they paid you XYZ, that is the reflection. Go and check your history. Every time you earn higher, every time you earn more, even if you are a business, every time you earn higher, you added a new skill. You increased in capacity. That's the way it works. So I told her that she should prioritize our investment in her personal development, in her capacity building, and that it will increase our income invariably. Of course, I never had to do that again. The next thing I told her was to start to save. I said I love her passion, wanting to save more. I said the only reason why I'm recommending she should save in her personal development or invest in her personal development was mainly because even if she decides to invest the entire amount of money, it will take her a long time before she ever achieves financial freedom. And so she needed to begin to earn a lot more than she was currently earning at the time. That was why I prioritized personal development. Now, guess what? I now told her, I said, the reason why I will still encourage her to still save, however little, is not because of the amount of money that she was going to accumulate, but mainly because of the discipline it will inculcate in her. That was the first thing. The discipline to postpone gratification, the discipline to delay gratification was the major reason why I recommended she puts that aside. And that she should do 10%. Instead of doing 50%, let her do 40% in her personal development, 10%. I said, so that will help her, to begin to develop and cultivate the discipline to put it aside. So now, you see what I've just told her now is exactly planning what to save. So how much of the income you make do you want to begin to set aside? I currently lead a non-for-profit organization also, where I'm still accountable, to leadership, okay? And the branch of that organization where I lead, right, still have a couple of remittances we need to make, for furtherance of the main mission and the big mission. So after about a year or so, I realized that all we were doing in that branch of that organization was basically just to keep spending, and we were incurring a lot of expenses and fulfilling a lot of obligations. Then one day I sat back, had a meeting with my team and the team I was working with then. I said, guys, I said the rent of that organization where we were was going to be due in another couple of months, and we had not saved any dime, but we were committed to fulfilling the other part. I said, guess what we're going to be doing? Whatever it is that we are remitting is exactly what we'll start to save. I said, whatever it is that we are remitting, we'll match it in figures, right? So this same principle of planning what to save also applies to you as a person, applies to a business, applies to a company, applies to a family, applies to your children. Okay? So this is so powerful. And guess what? We were able to save up a lot when the rent of that organization, that branch, was due. We were able to cover it, even though there were reasons, 1,001 reasons why we shouldn't have been able to meet up with the obligation. But it was so easy. Listen, everything you do incrementally makes it a lot easier to do big things. Let me tell you something. If you have 1 billion naira worth of projects you want to execute, but you have been practicing monthly periodic savings, right? It is very likely that you will still have somewhere around 50, 100, 150 million. That will even elevate your faith to take on such projects. If you have 100 million naira project and you have been practicing, these periodic savings, consistent savings, you would have built up some kind of 10, 20 million. That will elevate your faith to take on 100 million naira projects. I hope you know that in this country and around the world, there's no project, if you have 20% down payment for any property or any asset or any equipment, no business will reject you. But a lot of times, because we don't do it incrementally, we don't do it in bits and pieces, it makes it increasingly difficult for us to take on bigger projects. And this is why this principle is so powerful. So plan on what to save. I recommend 20% as a person. The earlier you want to retire, the earlier you want to be financially free, the higher you need to save. But take note. If the number of dependents on you, if you have obligations, massive obligations, is so huge, then it may affect your ability to do a lot more. So you may want to just consider even as low as 10%, okay? But if you really, really want to retire fast, and if you do not have so much obligations, I recommend you do anything from 20% and above. If possible, save up 50%, okay? I recall one of my mentees, who is also in this tribe. She was to go on a course. She was to go for a master's degree program. And she was contemplating between whether or not to do full-time or part-time. At the time, she had a full-time, well-paying job in the bank and was doing pretty well. And so she reached out to me and said, she's in a crossroad. She was to decide whether or not to go for full-time or decide whether to go for part-time. And I asked her, I said, okay, my concern with you going for full-time is that you would have to give up this job, right? Your current source of income. And our own concern was that if she decides to go for part-time, it will take a longer time to complete the program. And that program was going to take her like 2 years, 18 months thereabout, and 6 months for projects. But if she decided to go for full-time, she will only do it in 9 months. And so that was a big deal. So guess what she said? She said she has been able to save enough money, practicing some of these things that I've shared with her, that she has saved enough money to even pay her full tuition. She would only have to live a very conservative life to be able to contain and be able to cover going back from school. And guess some of the decisions she took. She was able to pay her full tuition. She was able to pay this tuition in full on account of her savings. Guess what, again, she did? She signed up with, a family friend that was not too far from the school. So she had cheaper accommodation and then, of course, cheaper transportation. So she goes there weekends, Monday to Friday. She was closer to the school and was able to cover a lot of things. And she was living meager. In 9 months, she was done. Now, guess what? The same bank she was working before, in fact, it was not even the same bank she was working before. Several other banks made her a significant offer. And she took those offers immediately after she graduated. She was now earning higher than what she was even earning before. And guess what she did afterward? Of course, the same bank she was working with before made her an offer, which was way bigger than what the new bank was offering her, and then was, of course, higher than where what she was, and it was in the area and the field in which she wanted to practice. The point I'm trying to make in a nutshell is there are many testimonies, many breakthroughs that we will have when we begin to practice our savings. If you always wishing and hoping for a special windfall before you start to save, you will never get anything done. So plan what to save. Okay? If you heard me clearly, please type that statement, plan what to save. Write it there for yourself as a personal statement. I will plan what to save. Okay? That's very, very, very important. So plan what to save. 10%, 20%, 30%, 100%, 50%, whatever. I have a very, very powerful woman, a very, very powerful friend. And this woman said she can save up 90% of whatever she earns. And that's been her practice, since she was a junior staff in the first company where she worked. That she used to save up a lot. She saves up a lot. That woman that made me to know that you can create wealth even as a salary earner. That woman was the one who made me to believe, accept that you can create wealth as a salary earner. So plan what to save, how much percent, however small your income is, however small your salary is, however small it is, make sure a percentage goes to an account that is dedicated for it. Okay, that is my recommendation. Number 3, plan where to save. Plan where to save. So you've purposed in your mind, you've made up your mind, that you will save. Number 2, you have planned what to save. Now you want to plan where to save. Okay? Plan where to save. Plan where to save. You need to understand this, that whatever amount of money you make, right, that amount of money may be suitable for certain investment instruments and may not also fit for some other types of investment instruments. So what do I mean by that? What do I mean by that? First is there are near liquid assets, near liquid financial instruments like bonds, treasury bills, but you can't put 5,000, 20,000 in those kind of instruments. They will still, in a lot of ways, satisfy your objective, but you need a more substantial amount of money to be able to explore such platforms. So you want to decide which of these instruments, which of these asset classes would you invest. Now, you can't have 5,000 naira and say you want to buy real estate, okay? Or you want to buy an investment property, okay? You can't even have $5,000, right? And say you want to buy, an investment property, okay? You still need some measure of investment, or you need a substantial sum to be able to make that happen. All right. I'm not aware, and I really cannot begin to advise now because we have a mixed audience and I cannot begin to give recommendations of where and where. But what I know, which I'm going to also touch on, maybe next week, we'll look at where to save. We'll dive deeper into where to really save. But what I recommend is that you automate your savings in such a way that, and there are many, many platforms, right? Many fintech platforms now where they even give you opportunity to automate your savings, and then they pull out resources from that account on a regular basis. You can't also cash out from that account, except if you break it, there are penalties. If you keep it there for 3 months, it has some benefit that gets accrued to it. So you can structure it in such a way that it can be on direct debit, it can be a standing order you give your bank, all right? So you can walk into the bank when you create that account, you can give a standing order that so and so amount of money must be going there. So if you have a fixed salary, for example, of say 500,000, 5 million, 1 million, 2 million, whatever it is, you can say every month, please move 500,000 to this account. You can decide and say, give them a standing order so that money will be wiped off, so that every time money hits your account, maybe at end of the month, 29th or 30th of every month is when your salary is paid, for example. You can decide that, well, every end of the month, move XYZ amount. It can be a fixed amount. It can also be a fixed percentage, right? Or you can decide that, well, anything that is in that account, any balance in that account every month must go into XYZ. You practice that for the next 3 to 6 months, and you'll be amazed at what that will be to you. The thought that you even have something somewhere as a way it keeps you sane and healthy. This is so important. So plan on where to save. We'll look at that in greater depth next week. Number 4, discipline yourself to do it. Discipline yourself to do. You see, in the journey to financial freedom, in the journey to wealth, one of the things I found out is that there are 3 ingredients you require. You need financial intelligence, you need financial plan, and of course, you need financial discipline. Of these 3, the easiest for people to have, and I've seen people who can even articulate their ideas better than I do, so they are financially intelligent. They know what an asset is, they know what a liability is, they know what the difference between cash flow and profit, they know all the financial jargons, they know, everything. They are financially intelligent, they are financially literate, okay? And they've even gone a step further to develop a financial plan, okay, which is the second leg, right? The second ingredient. But what a lot of people often lack is financial discipline. So you need to discipline yourself. You see, discipline is doing what you have to do even when you don't feel like doing it. So it's not a journey of convenience at all. It's a journey of discipline. In fact, this is what separates the boys from the men. Discipline. Discipline, the commitment to keep up with it. And it's one thing I have personally developed, again and again. Once I start out something, I just want to stick to it. No matter how difficult, no matter how comfortable, I would rather shift in time. For example, Wealth Unleashed webinar, occasionally, sometimes I will do 5 p.m., sometimes I do 7 p.m. And that's because of the crazy schedule that I run. A series of meetings lined up, later today, later tonight. So I do not have a choice. So I have to just, oscillate the timing. It would pay me more to stay consistent, but I have a huge obligations, responsibilities I carry on my shoulders. So the best I could do to continue to add value to people is to just make sure that, well, no matter what, Friday is sacrosanct. Nothing changes on that. So I could bring it earlier, I could make it later, I could make it, fixed. Now, it's the same thing I take to other things. Let me give you this shocker. Last year was when I decided I was going to become very extremely consistent with my YouTube channel. And I was going to begin to post content there every week without fail. And I'm just using this as an example because it takes discipline. One of the decisions I took, which is exactly what a lot of people don't do, one of the decisions I took, among other things, is I wasn't waiting for a perfect video. I wasn't going to be waiting for perfect lighting. I was just going to, turn the camera on and post. And the interesting thing, I kept on doing that. The same thing, don't wait for perfect income, perfect salary, perfect, don't wait for business to boom. Every dime that comes to your account, make sure you set something aside. Discipline yourself to do it. Okay? This is extremely important. What I have done in other areas, it's a function of discipline, and you can take that same discipline, take it to your finance, take it to your career, take it to other aspects of your life. Don't wait for perfect condition. Just implement at a micro level, right? If you are a trader, you are a businessman, for obvious reasons, I can tell that the money you make, right, is not going to be variable. So if you own your own business, I can almost guarantee that, well, your income is not going to be static. Even though you guarantee fixed salaries to other people, your income may not be, most likely wouldn't be. And so rather than be using a fixed amount for your savings, use fixed rates. You can say 10% of every money, 5% of every sale we make will be going as savings, 5% of every, or 2% or 1%. You just look at what works and discipline yourself to do it. Listen, I would rather that you do 1% savings every month consistently through discipline than plan to do 50% and you not do it at all. I'll repeat myself again. If your monthly revenue, for example, is say average of 1 million naira, and you plan to save 10% of that amount every month, it may be unrealistic because of several other obligations you may have. Now, you can decide that 1% or 10% or 2% of every money that comes in is what you'll be putting, you set aside. It will be a lot more consistent, and you'll be more disciplined to do it or to doing it than if you set a higher target that will not be very realistic. And this is exactly how to operate if you really, really, really want to stay disciplined and focused. This is so important. So discipline yourself to do it. 1,000 good intentions are not as powerful as one action. To just execute, all right? Just execute, just implement. It will pay off. It's just a matter of time. And finally, set up structures in place for your savings. You can decide that, well, every week, I know people would do a susu, what we call, cooperative and trips or thrifts. A susu is like a jaw. Is in Yoruba, they call it a jaw. I think the Igbos call it a susu, right? It's a way of saving money. It's a thrift society, basically, where you have 10 people that are contributing, say, 1 million naira. Now, one of them will pick up everybody's contribution for 1 month. Then another person, the second person, picks up the contribution of everybody for the second month, and on like that. Okay, this way, each of them are able to aggregate those funds, especially the early part. Those people who pick up first are usually able to aggregate funds they have not yet been able to save to execute a mega project. And it's a very powerful way too, okay? So look critically at that so you can set up structures. For you, it may not be a susu, it may not be a joy, it may not be trips, it may be deduction, it may be standing order you give to your bank that every week money comes, or you get paid every week, or you get paid daily. If you get paid weekly, then set up your structure to deduct, to set something aside weekly. If you earn every month, you set up a structure. Listen, do this thing and watch what will begin to happen. Watch what will begin to happen. You can set up a direct debit. You can decide that, well, every unexpected income, any unexpected earnings, you will set it aside, for savings. So only your fixed. So anything outside your fixed salary or fixed income is what you will run on. I mean, there are families where I know where it is the income of the wife that they are using to run everything, or the income of the husband they are using to run everything. Everything the wife earns, they set it aside as savings. And that's where there's unity and there's understanding, mutual understanding between both of them. And then where they set a common goal, common vision for their family finance. Okay, so these are things you can consider. We say, okay, so I ran into a man a couple of months ago. This man was running Uber. And he said the wife is the one who runs the entire home. That whatever he earns is what they use to plan their investment as a family. Ah, my goodness. So set up structures. So husband and wife should sit down and look at what is doable. That's if you also have a mutual respect, mutual love, mutual understanding, mutual goals, mutual. And that's really the way it's supposed to be. If you really ask me, you will even multiply faster. So, but again, just stick to what works for you. So there's no point trying to compare with anybody. So this is not to put you under any form of pressure whatsoever. So just stick to what works. So these are the set of structures that will help you. You can decide that, well, during your birthdays, people give you a lot of gifts, a lot of cash gifts. You can decide that all this money is what you're going to save up. You can decide that including all, for those of you who live abroad, tax refund season is here, right? February, March is tax refund season. It's usually tax season in the United States of America, for example, and there's a lot of refund that people have, so a lot of windfall, so that's another opportunity to set money aside and say, this money, we'll not use it, we'll not eat it. This one will be saved up. We'll use it to buy a property. We'll use it to do an investment. And so this is very important. And this is exactly where we are going to stop. So how to save? Purpose in your mind to save. Number 2, plan on what to save. Number 3, plan on where to save. Number 4, discipline yourself to save. And finally, set structures in place to save. And if you do that, you'll be a lot happier. I can tell you that you'll be a lot happier than where you are right now, both emotionally, mentally, and even physically. And it will impact on even your family life and your business life. I want to thank you all for your listening attention. I want to believe that this has been helpful. If you have any questions, now we are ready. Thank you very much, everyone. If you have questions, do you have questions? Do you have questions? Thank you too for joining. All right, so do you have questions? Yeah, I will take your question shortly, please. Just in a moment. So this is a very powerful question I'm seeing here. Just a second. All right. So someone is asking, please, how do I balance savings with self-development? I am currently running a postgraduate program and it is demanding. Fantastic. I love that question. Let me say to you right now that it's also a dimension of investments, okay? But what I recommend, and I gave an example, I don't know when you joined, but I gave an example of a young lady who I also counseled to invest in her personal development. So it's very much like what you're doing right now. And sometimes your investment in personal development, in skill development, in skill acquisition can be, can have high impact on your current income, right? So what I often recommend is make up your mind. Whatever it is you have invested or are investing in your personal development, as soon as you are done with your postgraduate program, turn it into an investment. It's like if you borrowed money and you are servicing that loan, the moment you're done servicing that loan, just turn the money. Just assume that you are still owing your future. So if you are paying 700,000 naira every month to service a loan, right? The moment you are done servicing that loan, just turn that same amount of money into savings. All right. So that's exactly what I would suggest you do. So if it is costing you, say, somewhere around 5 or 8 or 10 million naira, to fund this your postgraduate program, it may be a PhD program, it may be a master's degree program, or what have you. Just make sure that whatever it is that you have invested, right, in monetary terms, you convert it to savings immediately you are done. So set that in motion. So, and if you can, now, like I said, it is not much about how much you save, it's about the discipline it inculcates in you. So ensuring that you are postponing gratification, inconveniencing yourself. So if you used to eat twice or thrice a day, decide that you shut down, you eat once a day is enough. We don't live to eat, we eat to live. All right, so shutting down. So if you eat once a day, nothing goes wrong with you, right? But you do that to free up funds. So if you eat out, you stop eating out. And then because if you have money to do any of those things, then you could have money to also save for future. Okay, I hope that helps. Savings as a culture is fine, but I think one should not stop only at that in the current inflation and instability of the economy. Absolutely is the starting point, is the foundation, right? If you were part of the session we had, a few weeks back, I did mention some of these things, right? You don't end at savings, you don't stop at savings. You don't stop at savings. You save for investment. I did share that too. You save for investment, not as an investment. So savings is a bad investment strategy, but you can save for investment, not as in an investment. Okay, so and I laid that foundation. So you are in a better position to take on opportunities, right? Other people's emergencies become your own opportunity if you have savings in place. And it is for this same reason some people don't save at all. They don't invest at all because they've not saved anything up at all. So they are not able to take on investment opportunity because they've not saved at all. Okay, so I totally agree with you, and we've laid that as a foundation. I just calculated what I earned in January. Off I go to save it now. More wisdom to you, sir. Thank you so much, ma'am. Mrs. Bitola, thank you. All right, so Shola Shofade. Oh, Mr. Shola, good to see you, sir. Kindly expatiate on savings and inflation. Can't one use investment to save instead of saving in bank? It depends on how much volume. You know, some people's 10% is some other businesses annual. An individual's 10%, 10% of some individual's income, right, is more than annual income of some businesses in this country and around the world, right? For somebody who earns $1 million a year, the 10% on $1 million is $100,000. There are not many businesses in Nigeria who earn even $10,000 a year. So my point, therefore, is if your savings is big enough, or sorry, the portion that you can save up is big enough for investment, why not? Why not? Why not invest it? Yes, why not? But if it is small, then you have to build up before you save, or before you invest. That's the whole idea behind the structure. So if what you are capable of saving or setting aside from your savings is enough to take on investment opportunities, then why not? Take it. All right? So that's a good one. All right, man. Can you please give us a specific place to save where save that story that touch heart will not come later? Oh, next week is what I'm going to touch on. I'm going to touch on where to save next week, and I'm going to give you a few recommendations. All right, so that will be it for today. I want to sincerely thank you all for the interaction and engagement. I actually wanted to take this directly to Zoom, to YouTube directly, you know, and then just shoot. But my executive assistant said we needed to, that I love engagement. I love interaction a lot. It gives me life. And so I want to thank you all for the interactions and for your attention, for your listening attention. So next week, we'll take it a step further on where exactly you should save. And till then, always remember, winners don't quit and quitters never win. So stay inspired,